what we are going to deal with is the CRT. That's the candle range theory.
Okay.
We are dealing with the candle range theory, and in the candle range theory, we deal with the candle range and then the time candle range time. So, as we said earlier, every candle has a high. Every candle has a body. It has a wick. It has a wick. So with the bullish candles, it has an open, it has a low, and then goes to create a high. But what normally happens here is what we call the manipulation. What normally happens below, between the opening and the low, is what we call the manipulation. What normally happens between the opening and the low is called the manipulation. And after the open, we have the manipulation, and then it goes toward the distribution before the reversal. So I want us to just take some random charts, and then we have a look at it and you see how best. And more often, we are going to deal with three candle ranges. Three candle ranges. We're going to deal with three candle ranges. We're going to deal with three candle ranges. So you let me just take off everything out of this chart. So let's go to this particular day. Let's start from Sunday. Let's go to Sunday of this chapter. This happen in every trading session. Every trading session, this happen. This happen in every trading session. Let's see how it goes. We are going to Monday. Let's go to a Monday. So this Monday begins here. So we are going to use a power of three. Power of three. As you know, the power of three comes in three stages. That's the AMD. We call it the AMD. AMD. Yeah. That's actually A stands for accumulation. Can you unmute yourself, please? M stands for manipulation, and then the D stands for distribution. L stands for distribution. This solely what it does. So more often, what happens is that the accumulation happens on a Monday. Accumulation happens on what? Mondays. That's Mondays. And then the manipulation on Tuesdays. And then the distribution happens on the Wednesday. That's what solely happens. So let's look at this. Since this is a Monday, we are going to look at what happens. This is a Monday. Let's use MON, Monday, for accumulation. Mondays are for accumulations. Let's see how it goes here. So this is a Monday candle. Let's go to Tuesday and see what happens. This Tuesday, that's a high. Tuesday to when this Tuesday. So this is actually the manipulation. This on Tuesday. So we're going to go on Tuesday and say what the manipulation. That's going to be a manipulation on what Tuesday. That's going to be a manipulation on Tuesday. Let's use this for green or something. I think the writing should also be the same. No, I think we can see. Okay, so let me put the writing below below this below this. So this manipulation, and then on Wednesday we have a distribution. That's on Wednesday. This is what we call distribution. That's Wednesday. So this is going to be a distribution. That's solely what price does. But I want us to look at the time. This is what you should always look at. More often, the first candle creates the range. The first candle creates the range. The first candle creates the range. That's what we call the. If you join, kindly unmute yourself, please. Brenda, welcome. Yeah. Brenda, kindly unmute yourself. Hello. So, thanks for joining. So this one is going to be called the distribution. This is what we call the distribution. So I want us to look at this. When we go into the 8-hour candle, we are going to look at what happens at the 8. There are 3 candles. We are going to the 1 hour, the 1 a.m., 5 a.m., 9 a.m. We are going to use 195. 159. That's what you're going to look at. 159. These are times that are very necessary whenever you are trading this range. The 1 a.m., 5 a.m., and then the 9 a.m., 1 p.m., 5 p.m., 9 p.m. These are the times that the ranges are created. Time for ranges. That's actually the 1 hour, the 1 a.m., the 5 a.m., the 9 a.m. But when we want to trade, if you want to trade at 9 a.m., we are talking about the New York session. 9 a.m., you are going to go into the 1 hour chart and you are going to look for your 8 a.m. candle. You are going to look for your 8 a.m. candle. What's the 8 a.m.? This is the 8 a.m. candle. And in the 8 a.m. candle, you're going to draw the high of the 8 a.m. candle, the high of the 8 a.m. The high of the 8 a.m. candle is 205,632. 205,632. 205,632. And now you're going to take the low of the 8 a.m. candle. That's 205. Let me see what this. This is 205 205,640. Let's zoom into then from this one we zoom into the 15 minutes time frame. We're going to zoom into the 15 minutes time frame. When you go into the 15 minutes time frame, you're going to look for the order block. The order block that was able to break the 1 hour CRT high. Candle rate theory high. And I'm going to look at the CRT low. 1 hour CRT low. So you're going to look for that moment where it breaks. Whenever there's a break to the CRT high, it's signaling. Whenever there's a rejection at the CRT high, it's signaling that there's going to be a sell in the market. It's signaling there's going to be a sell in the market. So immediately this one tap, you realize that he has been avoiding this for a very long time, and immediately it taps this one. Sometimes it can even go as high as this place. Let me see what's the stop loss here. Let me see how many these things was it from year to year. It's like these are 16 pips. So even if you have like 30 pips stop loss, that's solid. Even if you have like 30 pips stop loss around here, you have a tight this. Even if you have 30 pips stop loss, this 34. Yeah. So with this particular one, let me see this. This 1 a.m. This 1 a.m. This is a turtle soup. This is a turtle soup that happened taking the high of this. If you miss this entry, you can go in for this one. But more often on a Wednesday, we are always going to look for an entry in the range of the Tuesday range. This is a body. This whenever the candle is created, from here to here is a range. From here to here is a range. Here to here is a range. Yeah. This is a range. This is a range of it. Yeah. So when we put our stop loss here, we know we are coming down here because there has been an accumulation on Monday. There has been a manipulation. Price actually didn't really want to move, but it had to move, and then it came down here. It came down here. Let me just focus on this. This is just something that you already know. I've taught you, Emmanuel. You have heard this over and over. Let's go to another day and let's see something. This on let's go to another day. Let's pick another pair. CHF. Let's pick another pair. Let's pick another pair. Let's look for Monday. Let's look for Monday. This is something that you need to back test. This is something that you need to back test by yourself. So with what we are discussing, we are dealing with three candles. We are dealing with three candles. These are the candles I like. We are dealing with three candles. The first candle has to create the range. The first candle has to create the range. And as I told you, the range is more often created between the 1 hour, 1 a.m., 5 a.m., and then 9 a.m. 1 a.m., 5 a.m., and then 9 a.m. So this is the first candle. And then this is the first candle that has created the range. And then we wait for what? The second candle to create the what? The manipulation. The first candle. And then we have to ensure, check and see what happens here in the second candle.
Pastor.
Yes, sir.
I wanted to know the time.
1 a.m., 5 a.m., and then 9 a.m.
Is it that one? It's New York time or
Yeah, New York
is
time.
the West?
That's New York time.
Is it New York time?
Yeah, that's New York time.
Okay.
Can mute yourself now. Yeah. So now this become what? The high of that becomes a high. So this one becomes a CRT high. This 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 one becomes your CRT low. CRT low. Yeah. So immediately this has done the manipulation. Let's give this color. Let's take a different variant. Okay, the blue is okay. So after this on Monday. Let's start. M is Monday. This on Monday. This happening on what? Tuesday. This on Tuesday. So immediately this one become a high level. This become your level that you are looking for. Immediately this breaks here. You have to look for another this entry here in the range of this. Since this one, the turtle soup happens, it had already happened. So the turtle soup happens around 3 a.m., 9 a.m., and then 9 a.m. It happens around 3 a.m. The turtle soup happens around the turtle soup happens around 3 a.m. 3 a.m. 6 a.m. The The turtle soup happened around 3 a.m., 2 a.m., and then 9 a.m. 9 a.m. So more often it is better to wait for 9 more often sometimes it's better to wait for 9:15 a.m. a.m. inside the 15 time frame, 15 minutes time frame. You have to wait for the 15 minutes time frame. You enter the 15 minutes for the first 15 minutes candle to be created. Inside the 15-minute candle for the 15 minutes order block to be created. When that order block is created, then you can find your entry. When the order block is created, then you can find your entry. When your order block is created around this region, in some of the scenarios, you have to look for the midpoint of this range. You have to look for the midpoint of this range, maybe around this side for an entry. So the next block will be like this. So whenever it happens this way, the next candle is going to distribute from here. So you are going to use this side as your take profit. You take your partials here. You take your partials here at this particular time, and then your take profit will be here. You're going to do your take profit here. You're going to do your take profit here. This is what you're going to do. This is a take profit. So your first partial will be here, second partial, and then your stop loss will be above here. This is a high risk to reward ratio. This is one measure of it. There are many funds, but as we are going, you realize that things become easy and easy and easy. Let's see what happens in this scenario. This is on Monday. This is Monday. So this Monday accumulation. This is a Monday accumulation. And then we're going to look for Tuesday for the manipulation. This Tuesday for manipulation, yeah. This Tuesday for manipulation. Let's see what happens around the 8 a.m. So go for your 8 a.m. candle. You know the 8 a.m. ends at 9 a.m. The 8 a.m. ends at 9 a.m. So let's see the low of this. The low of this is 150.20, and that's good. So this is a CRT. Let's do 1 hour. 1 hour CRT low. And I'll go to 1 hour CRT high. CRT high. Let's enter into the 15 minutes. So I told you what we look for is a bullish order block. The bullish one that touches the CRT inside this order block. The thick candle. I always look for a thick candle that touches the change in state of delivery. This is the order block. It touches this. That's the order block. This one. This becomes the order block. So right now we buy below it. But interestingly, there's another order block that formed here. So it formed in another order block. Let's see this order block. This is the order block that touched this. And then it reverses here. There was a change in state of delivery here. There's a change in state of delivery here. So we are looking at this is a high descent. It has already taken, let's say this is a previous Monday's low. Monday's high. Let's see this Monday's high. So what we are doing is we are still trading outside Monday's high. This Monday's high. This from a different class. I think I will upload this class later. This Monday's high. And then now we are looking for this order block. So immediately it comes here, you could sell here or sell here, but ensure that your stop loss is above. Like let's say 10 pips or 15 pips, maybe 10 pips. About like 10 pips. So this is 11 pips. So this is more like 11 pips. So this is a stop loss of 11 pips. Yeah. This is a solid setup. So this is it. So right now, what we are going to look for is this solid. So right now for this one, the scenario will be different because take profit should be around here. Take profit should be around here. This should be a take profit. Take profit. This should be a take profit. Yeah. This should be a take profit. Let's go to 4 hours and see something. Take profit down. You take your profit, it's okay. You are done. But if you want to be, you can hold it because where this is more powerful. Where this place, there's this liquidity down here. Can you see the screen now?
Not yet.
You cannot see, right? Can you see the chart, please? Okay.
Yes, please, we can see it.
Okay. So uh, this is something very simple. It's time. It's timing. This is always timing. This timing is timing. It's very important. Let's go to another day. Let's go for another Tuesday. Let's say this Monday. Okay, so let's see this for instance. This on a Sunday. So let's start from this. This Sunday to Monday. Monday, 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 Monday. Okay, this Monday. This is the lowest point of this. This Monday. This Monday. So Monday, this Monday, this Monday. So I told you, Mondays are for accumulation. Mondays for accumulation. Mondays are for accumulation. And then Tuesday is manipulative in nature. Doesn't mean you can't trade on a Tuesday. You can trade on a Tuesday, but you should know what you are doing. Tuesday is manipulative in nature. Tuesday is very manipulative in nature. You see the time what this one happened? That's 9 a.m. 9 a.m. The look at this. This 9 a.m. It happened here. Let me see you. This what happened. This is the time. This time. This what happened. So on this particular day, you go to the 1 hour time frame and look for the 8, 8, 8, the 8, 8, 8. How will I say the 8, the 8. 1 hour, the candle that form at what? The 8 o'clock. When a candle forms at 8 o'clock, it means that it started at 8 o'clock and ended at what? 9 a.m. That's whenever it happens. That's the New York time. When the time forms at 8 o'clock. So the low of this is 168.4. 168.4. 168.4. 168.4. Let me see this. So this one become what? CRT low. And then this one become our CRT high. CRT high. If you are just joining this, don't be confused. When we are done with the class, I'll upload the videos on YouTube and then you'll be able to have a look at it and understand it here. So the high of this is 163, 117. 17, that's it. So when we come here, the candle that formed at 8 a.m. it started at 8 a.m. and then closed at 9 a.m. Whenever we are doing this, it is time and pricing. At 9 a.m. the market shifts. 9 a.m. the market always shifts on a Tuesday. On a Tuesday at 9 a.m. the market always shifts. That's the highest point the market will reach on that specific day. So when we put the 1 hour, we are interested in the 8 a.m. candle. And when the 8 a.m. candle finish registering, you go into your 15 minutes time frame to look for the order block. You look for the order block. The last candle, this becomes your order block. The last candle that touches the last candle that touches when we this is the high of the 1 hour candle, this is the low of the 1 hour candle, this is the 1 hour, and here the last candle, the thick candle that touches this, that become your entry. So the order block. So if you're not able to take the trade on a Tuesday, you wait for what? Wednesday. And I told you these are the trade started. This one, this candle that is being tagged as one. This accumulation Monday one. This is what manipulation. these two. Let me change the color. The manipulation is going to be this color, and then so this is how the candle looks like. This candle, this is how the candle is. This is a candle that I just created. Let me use the same color that I used. This is a candle that I just created, and then it created. It has a wick. So this is the wick of the candle. This is a wick of the candle, the high and the low. So this one has created a range. And then this is a candle that came just here around this side. Broke this wick out, this and this. It worked out this and this. That's what happened right now. So this is what just happened right now. They worked out this. That's a wick here. This is a body. This is what the body is. The body is below this. And now on Wednesday, I told you that whenever price comes here, it can look for the middle of the range of the Tuesday session. So it came here. Even if you look at this is equilibrium. Let me just push this backwards. Let me just push this backwards. Push this backwards. It's okay. So if you look at this is a previous day equilibrium. This indicator is by this man. It's FX4. FS4 is by 2 degrees. You can get it if you want it. FS4 landing FX4 by 2 degrees. These are spelled 2 degrees. 2 degrees. That's the name of the guy. He's a wonderful guy. He's a wonderful guy. He has this indicator. Yeah. So let me just take off the indicator. Yeah. It gives you the equilibrium of this. So if you miss this entry, it's not everybody who can take this entry. It's not everybody who takes this entry. The entry that happened at 8 o'clock, immediately it takes here. This total soap is deceiving the market, the traders that price wants to sell. So whenever you see a wick above a body, whenever the body wicks, it wicks above a body, it is bullish. This one wick, a wick above this body is bullish. So right now, this one is going to sell here. It's going to sell here. Boom. So that's the distribution. So this accumulation, this is manipulation. This manipulation. This manipulation. And then this will be distribution. This is going to be distribution. Distribution. Simple. It's not anything too difficult. It's not difficult. It is not difficult. It is not difficult. It is not difficult. It is not difficult. Let me end this. Any idea God gives to you is very expensive, and you just have to always record. You always have to record every thought. Let's see how it is like. 4 hour. This 4 hour. Let's go to daily and see something. But one thing that we have to look here is that there are instances that there is a breakout. Breakout. There are instances that there are breakouts. I want you to write this thing down. take your pen, take your paper, and draw this thing down very well. I just want you to take your pen, your paper, and then draw this writing sticks down very well. Whenever you see a candle like this, whenever you see a candle like this, whenever you see a candle like this one is the bearish candle. So let me use my bearish candles are mostly black. So let me use a black for this. Whenever you see a candle like this, and then there's another candle like this is what we call for higher prices. So let me use this for green. This is going to be for higher prices. Can you write it down? Write it down. Draw it and write it down. Whenever I see a kind of form like this for higher prices. Price is always going to buy. It's bullish. So that's the same thing that we witness here. This is the same thing that we witness here. Immediately price sells above this becomes bearish. Let me delete everything that I drew on the chart here. So this one becomes the high of this, one becomes the low of this. So this the low of this becomes the low of this. This becomes the low of this. Yeah. The low of this is 14708. 14708. This one becomes the 14708, and then this becomes your this, yeah. 15166. 15166. This is a 15166. 15142, sorry. So this one becomes, so immediately price breaks above this. Breaks above this, a break away. So when I want to enter this, you have to look forward somewhere inside this range. I told you when you look at the previous video, every candle we have CRT. That's a CRT. That's a candle range theory. That's a candle range theory. So this is a candle. And then whenever this happens, this is a range. From this side to this side is a range. From here to here. From here to here is a range. So from this place to this place is a range. This is a whole range. So whenever price break above this range, when the body of this break above this range, it is telling you that this candle is what? A bullish candle. It has to buy. So, but you don't just buy here, you buy below the opening of this candle. This is the opening of this candle. This is the opening of this candle. The open of this candle is 15572. 15572. That's 15572. That's the opening of this candle. This is the open. So in this one, you are going to look for the, how will I say, the turtle soup. If you go to the previous video, you see the turtle soup. You are going to look for the turtle soup here. This is a turtle soup. You are going to look for the turtle soup inside. And the turtle soup is around this side. Look at it very well. We look for it inside this range. This range. This a range. This one is a range. Let me put it in the middle. Center. So that's a range. So this is a range of that candle. So that long candle, that long daily candle that you saw, this is a range. And now price is coming inside this range to take. More often than not is a 50% of this candle, this body, the one that's run away. This is a 50% of this candle. That's it. So how do you get a 50%? You take this rectangular something, come to the lower of this, try and extend it somewhere here. When you double click on it, the style, you go to style 50 middle line. You see when I draw here, look at here very carefully when I draw it. So that was 50% range. So more often price comes here, and more often it takes the upper part of this. So immediately you see a candle like this, that's what's going to happen. That's what's going to happen. Yeah. That's what's going to happen. So I will edit the videos for you to look at it later. Every candle has an open. This is how it is like. Every candle has an opening.
Okay.
You can unmute yourself, please. Every candle has an open. It has a manipulative phase, and it has what? An expansion space. That is expansion before it closes here. So this is more like this is an open. This is an open of the candle. Open. This every candle. This is what every candle. This is an open. This is a low, and then this is a high, and then we have the close. That's how the candles have been designed. These are the closes, like these are close. Between the opening and the low is what we call the manipulative state. This side. That's what we call the manipulative stage. Manipulative stage. So this is a manipulative space. So the markets accumulate here. It does accumulation here. So there's accumulation here. When it opens, it accumulates, and then it manipulates, and then what? It expands. Then from here to here is the expansion space. So that's the expansion stage. That's what we are looking for. So the accumulation happens on Mondays. Mondays, write it in your book. The accumulation happens on Mondays. That's what we did here. We did, I think, let me take this aspect of it. This Wednesday, this Friday, Monday. So let's see something here. This is more of an up trend. Let me see this. Correct. This will be powerful. This will be correct. This will be powerful. Let's look at this here. So this is Monday. So this is accumulation. This is accumulation. And when it comes to do what? A manipulation here. But this is a manipulation here. And I said 9 o'clock is when the market turtle soup. It does a turtle soup here. Turtle soup, 9 o'clock. So when you come on Tuesday, you are waiting for what? What will happen at 8 a.m.? What will happen at what? 8 a.m. What happens on 8 a.m.? So you wait. You wait. You wait and look for what happens on 8 a.m. So you look for your 8 a.m. candle. You look for your 8 a.m. candle. This is an 8 a.m. candle. This is an 8 a.m. candle. The 8 a.m. start at 8 a.m. and then close it at what? 9 a.m. So you come here, you draw the candle here, you stream it here. Let me see here. So the high of this is 12540. This is 12540. And I look for what? The low of this. The low of this. That is the low of this is 12316. One, two, three, 1, 6. So you are going to name this as what? CRT high. And you're going to name this as what? CRT low. So when you do this, you are going to then move into the 15 minutes. All this is happening in what? The New York Times session. So you have to look at your watch very well, and wherever you are, I believe most of us are in Ghana. So you are going to look at your time very well. And I look for what happens. You are going to look for the last candle that closes below. You are going to look for the last bearish candle, down close candle. So this is the last down close candle, the last thick candle. This is the last thick candle at 9:15. This This is a 915 candle. This candle. And observe how price behaves above this. And then whenever you get to this 915 candle, this is a 915, you are going to draw the low and the high of the 15 minutes candle. That one, this, and then this. And then with this one, you are going to set how will it take a stop loss of every candle. Every candle has an open. This is how it is like. Every candle has an opening.
Okay.
You can unmute yourself, please. Every candle has an open. It has a manipulative phase, and it has what? An expansion space. That is expansion before it closes here. So this is more like this is a open. This is an open of the candle. Open. This every candle. This is what every candle. This is an open. This is a low. Low, and then this is a high. And then we have the close. That's how the candles have been designed. These are the closes, like that. These are close. Between the opening and the low is what we call the manipulative state. This side. That's what we call the manipulative stage. Manipulative stage. So this is a manipulative space. So the markets accumulate here. It does accumulation here. So there's accumulation here. When it opens, it accumulates, and then it manipulates, and then what? It expands. Then from here to here is an expansion space. So that's the expansion stage. That's what we are looking for. So the accumulation happens on Mondays. Mondays, write it in your book. The accumulation happens on Mondays. That's what we did here. We did, I think, let me take this aspect of it. This Wednesday, this Friday, Monday. So let's see something here. This is more of an uptrend. Let me see this. Correct. This will be powerful. This will be correct. This will be powerful. Let's look at this here. So this is Monday. So this is accumulation. This is accumulation. And when it comes to do what? A manipulation here. But this is a manipulation here. And I said 9 o'clock is when the market turtle soup. It does a turtle soup here. Turtle soup, 9 o'clock. So when you come on Tuesday, you are waiting for what? What will happen at 8 a.m.? What will happen at what? 8 a.m. What happens on 8 a.m.? So you wait. You wait. You wait and look for what happens on 8 a.m. So you look for your 8 a.m. candle. You look for your 8 a.m. candle. This is an 8 a.m. candle. This is an 8 a.m. candle. The 8 a.m. start at 8 a.m. and then close it at what? 9 a.m. So you come here, you draw the candle here, you stream it here. Let me see here. So the high of this is 125.40. This is 125.40. And I look for what? The low of this. The low of this. That is the low of this is 12316. One, 2, 3, 1, 6. So you are going to name this as what? CRT high. And you're going to name this as what? CRT low. So when you do this, you are going to then move into the 50 minutes. All this is happening in what? The New York Times session. So you have to look at your watch very well, and wherever you are, I believe most of us are in Ghana. So you are going to look at your time very well. And I look for what happens. You are going to look for the last candle that closes below. You are going to look for the last bearish candle, down close candle. So this is the last down close candle, the last thick candle. This is the last thick candle at 9:15. This is a 9:15 candle. This candle, and observe how price behaves above this. And then whenever you get to this 9:15 candle, this is a 9:15. You are going to draw the low and the high of the 50 minutes candle. That one, this, and then this. And then with this one, you are going to set take a stop loss of